So I look at it like this, right? People are setting positions probably based on two things, right? And it gives me a little bit more of the, I would say, the sociological side of where the market thinks the price of the asset is going to be. So when you look at a V3 position or a V3 pool, what you're really looking at is a bunch of people chasing around the price depending on where they're staking, but also where they think the price is going to be. Does that make sense?
Yeah, yeah,
So
yeah.
there's a bit of a psychology factor that goes into it, and I'll give you a really good example of this. Was Dizzy was on here the other day because he got into Ape real early. He slid in on a single sided position into Ape and was trying. Was basically going back and forth, keeping up with the market. But the price just went crazy, and so I was talking to Josh about this the other day. I was like, I didn't want to do anything until we got past the initial hype curve, or the thing I always look for is the ADSR envelope that happens because of hype on the price of assets. And so if you look at the price at Ape, you'll see it did just that. Like it went through a very, very standard like ADSR curve to it over the last, let's say, let me see if I can find it. Like this part of the section, I'll post it in the voice chat so you guys can see it. But this to me right here was the first. Oh shit! I kind of cut it off with the price on there. But like, yeah, let me see if I can get a better photo. Um, this to me was the initial hype curve
Hmm.
of Ape, and now it's probably going to go through some sustained like growth. So with that being said, like I want to capture some of that upside opportunity, and I want to earn some Ape while it goes up. So that's my strategy. Is like just wait to get past the hype curve portion of it, and then try to find where it gets into more of a sustained price, and
So
then
you're
work
saying
there.
like based on the amount of capital in certain price ranges, you're able to use that to gauge the psychology of the market and see where the liquidity providers are thinking the price would be in the future?
Yeah, and it's just seeing how wide the ranges are and how much liquidity is within those ranges gives you a good idea of where the market makers are probably going to
Yeah.
try to keep where the
Wow,
price is
that's
most
really
likely
cool.
to be the most valuable, right? And if you
Mhm,
can find the most valuable positions to do that, then and you
mhm.
know who the repeat players are there, and or at least the repeat patterns for those types of things, then you have some real insight into the market, right? It's it.
Mhm.
It's not terribly hard to understand, but it is also one of those things that's just it has what we call survivorship bias to it. So you have to
Yeah.
constantly review it,
Yeah, and
right?
it's brain juice intensive, to if you're setting tight ranges, you've gotta
Yes,
monitor it
you got to
and
watch
and
it.
keep up with the positions, and it's not really,
It's not
it's not a
easy.
hands-off approach.
No, no. Yeah, it's difficult, right? Because
Mhm,
these positions have a lot of dynamic parts to them that you have to be aware of, and depending on where you started, you have to outperform whatever you would have been coming out of, right? So like just because your position's making a couple $100 an hour, well, if the price of ETH went up, 150 bucks, you probably didn't outperform the price of Ethereum, right? And you're going to miss out on some of that performance if you're intending on
mhm,
selling because you're stuck in a position that's out of range, not making any money at that point. So
mhm,
it's tough, right? Yeah, there's definitely with more reward comes increased responsibility and risk. So
mhm.
uh, the only reason that I focus a lot on this is because thinking from a product frame of mind, um, I think this will be everywhere in the next year, right? So
Yeah, and like you were saying a second ago, it's kind of dangerous or risky. You've gotta be careful wanting to
this,
automate things that deal with managing capital. But there's a huge demand because the capital efficiency, if you set super tight ranges, is higher, a lot higher than what you can get in traditional liquidity pools. So there's a huge demand I see from our community. I hear it often. People who are interested in Uniswap V3 but don't want to have to monitor their positions super closely, but really are attracted to the capital efficiency of having set ranges. And so like there's a huge demand for some sort of automation product for this, but I don't know of anything right now that is that's ubiquitous or that the market has accepted to automate
Uh,
this or anything like
it's
that.
kind of crazy. It's kind of crazy though too, because even though if you're doing like 30-40% APR, for some reason, standard crypto investors, or like the degens at least, they're not
Hmm.
happy with that.
Yeah,
And
yeah.
it's like, how could you not? You know what I mean? Like, that's still a ridiculously great APR on anything really, especially just in a single sector of finance. But
Hmm.
I understand it for sure. But I think a lot of people don't understand or know how to interpret um, how there's not a lot of people that think of strategy. They just think of
Hmm.
like, how much money can I make right now in these positions, and uh, yeah, I think there's a lot more that goes into it than we often tend to just cover when we do our trainings. But
Yeah, yeah.
yes,
So strategy is such an important topic, and portfolio allocations, reasonable allocation sizes, being able to do a lot of due diligence into the assets that you have exposure to set your portfolio up for success in a myriad of market conditions. That's what I'm super passionate about, what I'm all about. Am I able to share my screen in this channel? If not, it's cool, but
Nah.
no, not in these
okay.
channels,
Okay.
unfortunately.
All right. Well, I guess I wanted to talk a little bit about speculating versus farming, kind of take a step back from what you cover with specifically the concentrated liquidity pools, and just maybe give a yield farming 101 or a DeFi high level overview, and how I think about the space and how I try to grow my portfolio in a really good risk adjusted way, and what we're doing with our community and educating the masses on DeFi and the benefits of disintermediated, permissionless, open source, self-custodied financial system. So instead of just maximizing APYs in one specific farm, kind of taking a step back and thinking about the space as a whole. And
Yeah,
yeah, so I mean, there are huge benefits, obviously, for farming over yield farming versus just speculating on assets. I'm sure a lot of people here are incredibly bullish on ETH and maybe Bitcoin, maybe Matic, maybe some other assets, and especially NFTs and whatever thing you can hope to appreciate in price to then one day sell to somebody else maybe at a higher price. And that's a really popular way to make money in the crypto markets from really everybody, but especially new entrants into the crypto markets. They think, oh, I can buy something, it'll go up in price, and then I'll sell it and I'll make money. And that's awesome. And there's a good chance that a lot of these assets are going to appreciate in a really big way over the next few years or few decades. And they're not necessarily mutually exclusive, but it does kind of rely on somebody else coming in after you and buying it, and then they're hoping to make money, so they need somebody else to come in after them and buy it, hoping that they'll make money. And so in order for
beautiful.
yeah, in order for that to be a sustainable system, either you have to not be the greatest fool in the room, and if it's not a high utility cash flowing sort of asset, then you got to get out before the music stops, right? Or um, or there's just got to be a tremendous value add to that asset that's gonna grow over time. And I think that there's a lot of both of that in the crypto industry, in the digital asset space. There's a lot of assets, like ETH or maybe Bitcoin as well, that are probably going to appreciate over time, and so you can buy it as purely a speculative asset or a store of value. But there's a lot, probably I would say maybe 98, dare I say 99% of projects, whether they be DeFi projects, whether they be NFT projects or GameFi or whatever, that even if they are great and they have some sort of value add, they just might not make it through a bear market, or they might not stand the test of time. So what I'm super passionate about, besides all the macroeconomic implications of all this, but what I'm really excited about is being able to generate consistent cash flow with my whole portfolio in all market conditions, whether they be crab markets, roaring bull markets, or the pits of a crypto winter. I want to be able to generate some yield on assets that I think are going to appreciate over time, but also
That's right.
even stable coins or digital dollars or whatever. And
Excellent.
if anybody has any questions, feel free to throw them in chat as I kind of talk, and I'll share some links in here and some farms that I like as well as I go through it and talk through my process on how I think about different farms a little bit later. But yeah, another benefit of farming over speculating, especially speculating within, maybe the NFT space, as well as if you stick with assets that you believe in or that have long-term utility, assets like ETH or maybe Matic, or any digital asset that you have conviction will be around in 5 or 10 years, you're not ever going to run into the situation where you're left with something illiquid that you can't sell, which I think is a huge issue. I see a lot of memes. I'm not super heavy into NFTs. Actually, CryptoMonks are the vast majority of my NFT holdings.
Yeah,
So,
that's awesome.
but but I hear the memes that illiquid JPEGs or whatever, you can't sell them. The floor falls out. Nobody wants to buy them, and they're worthless. And if you're LPing, liquidity providing with ETH, if you're yield farming with assets that are going to be around, you're not going to be in that situation where your bag truly goes to zero and you're going to be left with something illiquid. And you
Exactly.
can get price appreciation while getting yield. You can capture trading fees. You can capture all sorts of different ways to generate revenue on these assets while also still exposing yourself to the upside. Yes, there are like stablecoin farms and ways to get delta neutral yield, but yeah, there's also, I want to keep exposure to ETH. I want to keep exposure to assets that are appreciating. So I will talk a little bit about stablecoin farming and delta neutral farming.
Excellent.
Recursive stablecoin farming, not really. I keep most of my stuff pretty simple, and I really focus a lot of my attention on just high level portfolio management, what my allocations look like, especially right now where I think we're at a really big crossroads between, yeah, there's uncertainty in the market because of the whole macro backdrop and the geopolitical situation in the world. It is a dangerous, somewhat dangerous time for risk on assets, an uncertain time for risk on assets. But it's also kind of the most bullish I've ever been on Bitcoin and ETH, considering the macro situation as well. So like, even though the vast
Yeah.
majority of the financial markets don't get it yet, a lot of the concerns or issues that are currently going on in the world, digital assets have a lot of solutions, and DeFi has a lot of solutions. Yeah. What's
Yeah,
up,
we are
DJ?
paying people. Yeah, we are paying people, who are going through war right now. Think about that. Like, we're keeping people going and we're able to fund this stuff because of this, right? Like,
Yeah.
because of this economy now that exists, right? Where we can trade value like this. And it's crazy because we have a friend who is in Ukraine who was taking USDC to gas stations so that gas stations could keep selling stuff in Ukraine, which is kind of nuts. But yeah, I'm 100% with you on that. I didn't mean to cut you off, but
No, you're good. I saw a
that's
story
great.
on CNBC yesterday, and that's CNBC. Like, this isn't like some sort of digital asset, publication. This is like Boomer Finance Network. CNBC talking about how a 20-year-old kid in Ukraine took his life savings with him across the border to Poland, in Bitcoin.
On
So
a thumb
yeah,
drive, yeah,
yeah,
on a
yeah.
thumb drive,
Wrote down
right?
his
On a
seed
little
phrase,
USB
and
drive.
yeah, that's it. So
It's crazy.
yeah, it's crazy. So I talk sometimes to TradFi folks and just comparing kind of traditional finance with DeFi, and a lot of the problems that DeFi solves is traditional finance is in a lot of ways a black box, which is a software development term that basically means stuff goes in, stuff goes out, but what is actually happening in the middle is not open source like it is in DeFi and on blockchains. And we have audits. There are different ways to kind of get some assurance that risk is being mitigated within the traditional financial system. But there are financial products and services that can carry a lot of risk that the broader market or regulators might not even realize because of the kind of closed door black box nature of the traditional financial system. And it's a system where, the system that currently global trade and, your bank account and how you pay rent or your mortgage and, traditional equity investing, all of this TradFi that we've built, it relies on centralized authorities to control the flow of money, the creation of money, the records of who owns what money. And, it's great if you're living kind of in a utopian society where the governments and the central banks or the trusted intermediaries and institutions are acting in good faith and are competent and all that sort of thing. But, for a lot of the world, that's not the case. And even in developed economies and the Western world, there are potential shortcomings. It's not a bulletproof system to have governments be able to create money or to decide who can spend money on what, and it basically relies on trust. And not only that, but the yields for the especially retail users on their assets, specifically their cash, they're abysmal. They're terrible. They're incredibly low.
You're not incentivized to save anymore, right?
Yeah.
Like there's no incentives for it. They're
And
not trying to incentivize
that's
saving.
by design. Yeah, that's
Yeah.
definitely by design. Because the economy is essentially fueled off of spending. If you spend money, that means somebody else is making money, which means they can actually get more debt because they have a higher income, so they can actually get more debt since the TradFi doesn't rely on collateralization, which allows them to push more spending or have more spending in the present, which grows the economy. So, but not to get too into macro, but basically in traditional finance, at your bank, you're going to get dog shit yields on your
Yep.
cash, and everybody knows that. And a lot of times you're also getting really screwed over on the borrow side, depending on what sort of avenues you're going. I mean, yeah, you can get a low fixed rate mortgage, but credit card debt or vehicle loans, or a lot of debt products that are given to retail through traditional finance are almost predatory, or in a lot of
Predatory.
ways high, way higher than what's available in on some free markets
Learn
on
how
DeFi.
learn how compound interest works on a mortgage, right?
Yeah,
It's like,
yeah.
yeah.
And
You
so
pay all your
by
interest up front.
by contrast, DeFi, decentralized finance, is open source instead of black box. It's relying on smart contracts or immutable code in pretty much every instance to facilitate the flow of cash or digital dollars or assets like Ethereum or whatever. There are you can program monetary policy into these assets. So, while ETH kind of has a more interesting monetary policy that we can get into in a little bit if you'd like, but Bitcoin definitely has a very fixed supply schedule and a fixed monetary policy, as opposed to an unpredictable and uncertain supply of fiat within the TradFi system. And there are distributed records, obviously, on blockchains where you don't have to rely on any group of entities or any trusted parties to be able to report who owns what. You don't have to get an IOU for your assets from an institution. You can actually hold your assets yourself, which, like we were just talking about in the instance of geopolitical uncertainty, or even instances of this happening in the Western world, where people don't have access to their funds because of either denial of access from the intermediary or from the regulatory body over the intermediary, or whatever. So being able to take self-custody, as I'm sure a lot of people understand to a pretty good extent here, being able to actually own your own assets is a huge deal. And it's something that, as we see kind of the weaponization of the financial system on a macro scale, I think that more nation states, more institutions, and more individuals are going to start pricing in that risk a little bit more. And so,
Yes.
yeah, being able to have self custody is kind of a big deal, and you get a lot higher yield, just flat out. You know, you're not going to get 0.03% on stable coins. You can get 20+% consistently, pretty consistently. And then even in certain market conditions, and if you kind of take certain risk with counterparty risk, you can get 30, 40, 50% yields plus, depending on how far on the risk curve you're willing to take. And oftentimes those yields can be subsidized by VC money or by the project itself, and that's where some of it comes from. But I'm sure a lot of folks know that there are, basically liquidity positions you can take. You can be a market maker and generate fee revenue from the platform that you are providing capital for. And not only can you get the yield from revenue from projects like UniV3, but if you explore other projects, especially projects that are, less established, or even if they're established, if they've taken kind of a strategy of emissions and paying liquidity providers in order to attract high levels of capital, that can be, for usually periods of time, a super profitable strategy to essentially farm these tokens, provide capital, not only collect your fair share of like liquidity provider fees or whatever the platform is, kind of take a farm and dump type of strategy,
Mhm.
or you can, farm and dump for stables, farm and dump for ETH, farm to compound your original liquidity position, or farm to accumulate the project tokens if you are kind of really adept at being able to do your own research in terms of understanding tokenomics, understanding the potential platform's ability to get a good amount of market share in whatever use case it is trying to fill. If it has product market fit and you can see other DeFi users getting real additional value out of that application, if it checks kind of all your boxes for tokenomics and security and product market fit and a strong team, a lot of times if you're getting an APY paid out partly in swap fees that is accruing within your LP position, or is denominated in whatever assets you're LPing, you're also, there's potential to get additional token rewards. And if you don't dump those and you're confident that it's a good project, your effective APR could actually be much higher than what's advertised. And this is fairly rare, but
Mhm.
if you accumulate something that is essentially going to be a critical capital rail and that token has real utility, then it can be kind of, there's a lot of room for asymmetric upside there. But
Gotcha.
that requires essentially the ability to be able to vet different projects. I mean, if you were farming Curve in the pits of its bear market, and at the bottoms of its prices, and you held it and you didn't farm and dump, then obviously your effective APR was a lot higher than what was advertised at the time. But kind of what I don't want to say specialize in, but a big part of our strategy and my mentality during, well, really the last couple months when, market conditions were less certain, is delta neutral farming and being able to generate high yield off of just volume and stable coins. And I'm sure that, a lot of folks
How,
here are, go ahead. What's up?
yeah, so like, what's the process of that though? Like, when you're creating a delta neutral farming strategy, could you walk us through that a little bit, and how you're making that, or is that kind of just more along the lines of like uh, giving away too much
No,
right
no.
now?
Yeah, there's a few. I mean, I don't want to get too in the weeds, but
Yep.
Stablecoin farming, number one, easiest, oftentimes very high yield. I'm sure people are familiar with Anchor. If you're familiar with Stargate right now, that's super, I mean, high yield. If you're on the Matic network, if you're on Polygon and you've got USDT, if you've got Tether, that's 23% or more yield right now. Stablecoin farms are probably the easiest way to get yield without taking directional exposure to any assets. But I
Yeah.
am a real big fan of using on-chain money markets, things like Aave, things like even Banker Joe on the Avalanche network, to essentially utilize my, because I have a lot of ETH. I love ETH. I'm extremely bullish on ETH over the next year, 2, 3, longer. And I don't always want to risk all of it to impermanent loss. Even though impermanent loss definitely can be mitigated, and sticking with correlated assets and tons of ways to mitigate impermanent loss. But if I can utilize my ETH that I'm already holding in order to short assets that I am liquidity providing by borrowing, using my ETH as collateral, borrowing whatever that asset is against my ETH, shorting it, farming on a high yield farm with that asset, then I'm essentially able to capture the APR of that farm without taking exposure to that asset itself. There's also ways to negate exposure to short farms with futures contracts and that sort of thing, but kind of a little bit out of scope, I think.
Do you guys do a lot of that though? Do you actually deal with futures, or you guys? Because one of my good friends does a lot with Deribit. It's something that we're not allowed to do here in the United States, with Deribit being on crypto futures. Do you guys use that, or do you guys do
Yeah,
something similar?
so yeah, as far as like using centralized exchanges and stuff, yeah, it's pretty limited geographically. If you're gonna do it off chain, I think there are some interesting futures platforms on Arbitrum, and but I don't particularly use them. My main delta neutral farming strategies that I personally use are stablecoin farms, and then using money markets, not to be totally delta neutral, but in times where the markets are like really hot and I feel like there's more risk to holding volatile assets, to kind of hedge my position by shorting assets. I did that a lot because I am bullish on Avalanche as well, and I do farm a lot on the Avalanche network, and so I did that a lot kind of in the last market highs of a few months ago, where Avalanche was north of $100, and I thought, well, I like this asset, but this is it's pretty hot right now, and it was very liquid, and able to be essentially shorted using a money market totally on chain. And so you can still capture those super high APR farms with AVAX, and then shorting my or hedging my AVAX exposure by shorting it on a money market. So
Gotcha. Yeah. So yeah, do you guys? So you guys are actually an entire company focused on driving on fee, right? So you guys are.
our focus is really education and also connecting high net worth individuals in our mastermind, kind of. So I'll get into that a little bit in a second. I kind of wanted to go over this platform I'm super bullish on. Have you heard of GMX? GMX.io? Are you familiar with this?
No, I'm not familiar
Okay.
with it.
Okay. It's on Arbitrum, and it's on Avalanche as well. And I mainly farm it on Avalanche, but I thought it'd be interesting for this group because yeah, what are your thoughts on the Uniswap token? I'm kind of curious.
I own a bunch, but I've had it forever, so I haven't done anything with it. It's just literally sitting there. I haven't done anything at all. It's like, I know you can actually compound it on Oasis and do. Um, I don't remember. Roman was talking about it. One of our guys was actually in here talking about it the other day, but I haven't done anything with it.
Okay.
Literally just sitting on it.
You know, I've personally like I really like the Uniswap platform, but I've personally been kind of bearish on the token because it doesn't really pay you to hold it very much, and that's kind
Hmm.
of like my whole shtick.
Hmm.
So is trying to
Yeah,
yield farm with it. But I was curious because this, if you guys click on that link or go to gmx.io,
I'm on there right now. Yeah,
I think it's the third highest TVL DApp on Arbitrum.
on Arbitrum.
Yeah, like here, let me make
Yeah, I've got a
sure.
bunch in Arbitrum Uniswap right now. I've got pools that
Yeah.
are running.
Yeah, it's the third highest behind Sushi, Abracadabra, and then GMX. But this is like one of my favorite platforms right now because I mean it's essentially it allows users to leverage trade. And obviously, people are gonna eat that.
Gotcha.
They're gonna eat that shit up. They
Yeah,
people want to do it. There's a high demand for it on the in Arbitrum and Avalanche. There's tons of degens that love to leverage long,
yeah,
leverage short,
yeah.
and you can also have no slippage spot trades as well. So it's really gaining a lot of traction, and you can LP on this farm essentially. And if you were to trade your Uniswap for an LP position, it would sell a lot of it because it's only
Yeah,
1% Uniswap. So if you're bullish on Uniswap, then and you want to keep your exposure, then yeeting all of it into this farm would obviously not be a good idea
yeah,
because you'd be
ruin that.
selling a lot
Yeah,
of it.
yeah,
But essentially, if you're comfortable with these allocations, so GLP on Arbitrum, it's a little bit different on Avalanche, but on Arbitrum, it's essentially like 50% or 55%, I think 54% stable coins, 3% Chainlink, 1% Uniswap, 12% Bitcoin, and 25% ETH. That's the holdings essentially of this liquidity pool. It doesn't exactly work quite the same way as traditional liquidity pools or concentrated liquidity pools with V3. You'll
yeah.
see if you look at the weight of the different assets, they're not always right on. They vary a little bit,
Hmm.
and they basically keep the desired weightings within the liquidity position, which is GLP, by charging fees for buying GLP, which is the liquidity position, with the overweight
Gotcha.
assets, and selling if you want to cash out your GLP position into one of the assets. You don't pay. You pay super low fees or zero fees if there's too many of that asset in the pool. So it keeps its weights essentially roughly with kind of just incentive mechanisms. But
Yeah,
GLP is the liquidity that allows these users to leverage long, leverage short, and spot trade with no slippage. And if you go to essentially stats.gmx.io, that link right there, they give a lot of data on the platform, in a very easy to see user interface. And this is one thing that I really like about it. And if you see the volume is is up and to the right, bigly. That's it. Up and to the right, lots of volume. The fee revenue generated also up and to the right. There's
wow.
just a lot of people using this platform, and it's kind of been coming of age in a in rough market conditions. And I think it expanded to Avalanche in like January or something, early January. And what I really like about this is rain or shine, this thing is probably going to do well now, because there is a certain risk of, if we go up only mode or down only mode and all the users long in up only mode or all the users short in down only mode, then there is a chance that this platform, could lose money or be low
Yeah,
yield. But it's like that's like kind of betting against a casino almost. Like, could Bill Gates come in and put it all on black? Yes. Is that going to happen? No. Like, this platform really consistently, especially if you can look a little more into their fee structure and how they charge their users to actually create these positions a little bit as well, and hold these positions. But it's pretty much been a cash cow, and especially in volatile market conditions where the leverage traders are getting juked super hard, is when it
yeah.
generates the most revenue, which, as you imagine, it's been doing, pretty well. And right now it's the yields north of 40%. I've actually never seen it below
Really.
40%. and this is like not something you have to manage. This is not something that is, a headache, and you don't really have to worry about the market conditions. And on Arbitrum, a little bit over half of that yield is paid in straight ETH. Some of it's paid in the GMX token, which is
The
escrowed.
GMX, yeah,
Yeah, you actually
yeah,
don't get it all when you get paid out in GMX, it's escrowed
yeah,
GMX, so you've got to vest it linearly over a
yeah.
year. So you don't get
Gotcha.
immediate access to it, but it's essentially, always pretty much in my experience over 40%. I've seen it as high as like 65% within the last month. The yields update every Wednesday, and the previous fees are trickled out over the next week. But
So you get 20% of. So if you're getting 40% APR, a little bit more than half of that is paid out in ETH. The rest of it is GMX, right?
yeah,
Possibly.
yep,
Is that okay? Okay. Okay.
yep,
All right. Cool.
yeah. Here,
Yeah,
I'll
this is nuts, dude.
yeah, I know, right? It's one of my favorite farms right now. Here, I'll throw a screenshot of the yield in chat in the breakdown. But like I said, it
And it's,
updates.
everything on Arbitrum is like it's much less expensive than to operate on ETH, by the way, too.
Oh
And the bridge
yeah.
over there, yeah, yeah.
Oh yeah, much less expensive than mainnet. I think swaps right now on Arbitrum are sub $1. And
Yes.
they should get cheaper. So yeah, I'm really excited about this platform. I mostly farm on Avalanche with this. The yields, they go back and forth. Sometimes Arbitrum's a little bit higher, sometimes it's a little bit higher on Avalanche, but the
Yeah.
liquidity position itself is different. The basket of assets are different on Avalanche versus on Arbitrum. And so,
Of
but if you're
course.
comfortable with stable coins, specifically Frax, MIM, DAI, Tether, and USDC, as well as a 1% Uniswap allocation, 3% Chainlink, and then Bitcoin and ETH. It's a really dank yield farm.
Yeah, that's a good one.
Yeah.
Yeah. So you said you actually do more on Avalanche though than on Arbitrum,
Yeah.
typically.
Mainly because I'm not a fan of the tokenomics of Uniswap, and I actually have some Chainlink, but it's a small part of my portfolio, and I'm not really interested in growing it anymore. So I farm mostly on Avalanche for this farm. Yeah.
Gotcha. Gotcha. Yeah,
Hmm.
this is sick, dude. I'm gonna look into
Hmm.
this. That's funny. I just moved over to Arbitrum, like a small chunk of what I was doing, just because I was also testing out optimism pools.
Hmm.
Um, just because volumes picked up, but then it died down. It looks like Arbitrum's got more volume than Optimism, actually a decent amount more. And Optimism pools move really, really slow. Like
Hmm.
there's just not a lot of action going on. So um, yeah, so I was really, really happy to see how performant it was.
Yeah,
So this
I'm
is cool.
really hopeful for layer twos getting mass adoption. How do you think that trend shapes up over the next year or so?
I think that'll be the trend because it's not
It's
hard to
gonna happen on
implement.
Polygon.
Yeah, yeah. This is all. Yeah, it's just this whole entire ecosystem, especially with the announcement of like uh, the the release of MetaMask doing their own token and stuff like that. It's going to be huge. So I think we're going to see a lot of cross chain and layer two adoption, and then it's going to become really just more about the standardization of cross chain. Moving assets across chains quicker, right? There's going to just be opportunity everywhere, basically. And I think we're going to see that as the fees kind of change around and move around from spot to spot. Um, Multiple EVM instances are going to be common for most people. Uh, Most of our interfaces probably won't even really tell the difference at this point between different running EVM interfaces. Yeah, that's what I really can't wait to see. Like, all of our interfaces only let you look at one network at a time, and I think it's kind of dumb.
Yeah,
But
yeah.
whatever, whatever. Who am
That's why, Stargate and Layer Zero is an interesting project. Have you looked into that at all?
I? You know what? I own a bunch. I'm in Stargate liquidity positions as of like 2 days ago,
Yeah.
which is kind of funny. So, yeah, because we found it and we were like, "What the hell is pumping right now?" And Stargate started taking off, right? So we looked into it. We did that here on Monks. We were just looking at revert. I was looking at it with Hogs, Hogs and a couple other people the other night, and I've got 2 Stargate positions, both of them less than $10,000. But I'm making $200, $250, $300 a day. It depends on which one because I have them both set at different ranges. But yeah, for the last 2 days, I've been doing really well with it, and the price seems to be fairly consistent. And there is a ton of volume right now on Ethereum mainnet with them. So what's going on there? Like, do you know more about what's happening there? Because I believe they've been around for a while, though. They just haven't had any LP or anything like that, right?
Well, kind of my network was super bullish on it. Super bullish on the Layer 0 project because Layer 0 is the cross-chain messaging protocol that Stargate is actually built on top of. And it's very interesting tech. I think, like you were just saying, the trend of cross-chain interoperability in a secure way is going to be a huge narrative and something that we really need to get right as an industry if we want to nail the user experience and onboard a lot of people onto this technology. But yeah, Stargate, it enables cross-chain swaps in a really easy, seamless, good user experience. But I'm really bullish not just on Stargate, but on the protocol that it's built on top of Layer 0, because Layer 0 is the technology that enables Stargate. And there's other cross-chain interoperability tech. Obviously, there's like Thorchain, there's the Chainlink CCIP protocol, which is I don't believe shipped or anything yet. There's like the Cosmos IBC technology that they're trying to make a standardized protocol to connect different blockchains. But there's kind of a lot of dogs in this race, and I don't know which one is gonna win. But
hopefully there's a lot of them, just a ton of them, right? Like,
I don't know. It needs to work. It needs to work. It needs to not get hacked is the big deal. Because I mean, the wormhole situation was a nightmare.
Yes,
That's like a nightmare of epic proportions. Imagine something like that happening when there's like an order of magnitude more capital on all these different networks, and all of a sudden you have a bridge get hacked and all of the non-native ETH on a chain is just now worthless, and that entire chain is just like destroyed and everybody's wrecked. Like these are the security implications of holding non-native assets and having custodial bridges. Like even if the bridges don't rug, like if they get exploited and they are issuing wrapped assets on a blockchain, all those wrapped assets could no longer be one-to-one backed. So that's the situation that Solana found itself in after the wormhole hack. And luckily there's some big pockets and Jump Capital and people heavily invested in the Solana ecosystem that just made everybody whole, fixed the exploit, and decided like we're gonna move on from this, maybe rename the bridge to something else and pretend that never happened. But but there's got to be a real solution, and Layer 0 could be it. It's also compatible with subnets on Avalanche, which I'm bullish on for specifically application-specific blockchains. I like Polygon, but small number of validators and centralized network, centralized sidechain. Like I did a lot of farming kind of right when I was really starting to dig my teeth into yield farming with the Polygon incentive program and how that started. And I think they're doing like a lot of research with zero knowledge technology and Ethereum scaling solutions. And so that's good. But ideally to me, the execution environment is either secure or containerized to a specific application.
Yeah, that's a good point. Yeah, I think, hey, one question here from Huckmat about Stellar Lumens. Do you guys think anything about Stellar Lumens? You guys ever do anything with Stellar?
Personally, I don't see any high yield opportunities on it, and I don't see any catalysts as far as like payment networks. I'm pretty bullish on the idea that the dollar is probably going to be still a medium of exchange for a while. So, correct me if I'm wrong, but isn't, the goal of Stellar Lumens to kind of be a payment network pretty much and move the Stellar Lumens around?
Yep. No, that's the
Um,
whole point. And
yeah,
then you'd be
so
able to transfer them cross-chain interoperability between payments. But yeah, it's
in my mind, stablecoins kind of fill that need in the market by being that stable, because we need, if we're gonna have a medium of exchange, ideally it's stable. While the U.S. dollar is down over time on a short term time horizon, it's very stable. So, um, what do I think of Terra? I think that UST and the Terra ecosystem, they're trying to do something that is really really great and has a humongous potential. I think probably, in my opinion, I think Bitcoin is again, not financial advice and all that jazz, but it's my opinion that I think currently at the current prices, probably Bitcoin is a better risk adjusted return than holding Luna. But I think because there is a chance that this experiment in this decentralized stablecoin that they're trying to do fails. But I think it's
Mhm.
really good. And what I've noticed from a kind of sociology and narrative perspective is people who are orange pilled, Bitcoin only, everything besides Bitcoin is a shitcoin, like those type of folks who, never talk about any sort of altcoins or anything other than Bitcoin. Do Kwon buying lots of Bitcoin and intending to buy billions of dollars of Bitcoin over time to collateralize, and if Bitcoin appreciates, over collateralize UST. I think it makes total sense, and they are in the Bitcoin community is really jumping on board with it, which I have not seen them do with any other altcoin. So, my concern from a security perspective would probably be, well, you've got the Terra Foundation that's like custodying all this Bitcoin. How are they, like, if UST is redeemable for Bitcoin, if that's going to be the plan, and UST is going to be over collateralized with Bitcoin over time, how does that process work? Does it rely on a trusted authority to control and custody those bitcoins, or can we create this system of an over collateralized decentralized stablecoin in a totally trustless way? And that's the question that I would really need to know the answer to. And if I knew and it made a ton of sense and it was super secure and trustless, then then Luna would be it. There's also the tokenomics dynamics with Luna and UST that I think everybody really,
Mhm.
really needs to be aware of, where the Luna price is very heavily correlated with the total supply of UST. So, especially under the current like mint burn mechanism, as UST increases, uh, the the supply of UST increases, the price of Luna should increase. And yeah, wow, that's
Yeah, the Iron
guys are
Titan disaster.
yeah, exactly. It reminds me of
Run
that
on the
too.
bank.
But but I actually was in that as well. I did all right because before it all blew
Oh,
up,
really?
yeah, before it blew up, I ditched a lot of Titan. I think it was like $60 or something, and so I kind of got out of
Oh, whack
Titan.
me, dude.
Uh,
You
but
didn't three
but
comma three with everyone else, huh?
no,
Just kidding.
but I stayed in iron. I stayed in iron until I saw the price of
Gotcha.
Titan in free fall. And while everybody else was like buying Titan and like buying the diff and everything, I was like,
Oh no.
I was like,
Oh,
okay, I think that that iron is probably gonna get out of this while I still can. So I got out of iron when it
no.
was probably at like 90 cents or something like that. So um
Gotcha. So
yeah.
real quick, just kind of touching base. What are you guys doing at yieldfarming.com? Since we are
Yeah.
kind of running short on time.
Yeah. Well, here I'll throw a link in here. So we've got actually two different groups. We've got Beat the Banks under yieldfarming.com, and that is like all of our free content on Beat the Banks. We do interviews with people like myself. We have 9 full-time coaches, analysts, and DeFi researchers. So we have like a whole team of people who basically are full-time researching all these different protocols, coming together, spreading this information and education to our community. We do usually weekly on Friday on Beat the Banks, live
Mm-hmm.
streams or like Q&As or coaching. And we have a bunch of like free like coaching and educational things on there and resources and stuff like that. And then we have a uh, kind of like almost like an institutional offering. If you're kind of a more serious investor and you've got a bigger portfolio and you really want small classroom environments, and to be part of a really tight community, a smaller community of pretty much exclusively high net worth individuals. Um, Essentially like everything that we can't offer for free because we have like staff and everything like that, and coaches and analysts that we have to pay to teach and everything like that.
Yep.
And they're pretty expensive. So if you have a portfolio of greater than $30,000, it doesn't cost $30,000, but the requirement for our paid mastermind with the high net worth individuals, small classroom environments, weekly Q&As, we do like research publications, that sort of thing. If you've got a portfolio of higher than 30K specifically in crypto, you can qualify for our paid group, and you can learn more about that at yieldfarming.com. Here, I'll get a clickable link.
Yeah, I'll get it to you. Yeah, I just joined the Beat the Banks too. Just jump. I'm in here. You guys have just a ton of questions on here that have been answered, like FAQ.
Yeah.
Sounds.
Yeah,
this is
and
great.
I usually hop on there. I kind of do probably more live Q&As or like coaching seminars or like lessons basically than the average coach or researcher on our team. But I probably hop on there like once every 3 weeks and do an AMA, or I just recently did a lecture that we recorded. I think we'll have it posted soon on my checklist for doing your own research and tokenomics, because I think that a huge thing that wrecks a lot of altcoin traders or even like small market cap or, new project yield farm, like degen yield farming type stuff, is people don't understand the tokenomics and like the supply side implications of a lot of the assets they're getting involved with. So I did kind of an
Yep.
in-depth lesson on DYOR and tokenomics and everything like that. We don't have a Discord right now because it's kind of hard to moderate. Circle is what we do.
Join monks.
Our yeah. A lot of our investors are actually in monks. Yeah, Circle is what we use primarily because it's kind of like Discord and Reddit together, kind of had a baby almost. It's a kind of a combination of the two. But yeah, beatthebanks.circle.so is
That's a
our
good
is
name.
our is our free everything. And yeah, we've got the yieldfarming.com URL. I mean, that's the dankest. I have no
Yeah,
idea
that's a good
how
one.
we got that domain name, but
That's a good one.
yeah.
All right, excellent. So, hey, we did actually create, and this is the first time we've ever done this, and I should have probably announced it earlier on. But if anybody here actually uses POAP, we generated a POAP for yieldfarming.com today. I think you have. Does somebody have the link for it? Actually,
Yeah.
yeah. So we
Yeah,
are
I
going to
got
keep
you.
track of.
Give me 1 second.
There we go.
I just posted in there. That should
Oh,
should
dope.
work.
All right. So there it is. For most of these scheduled events that we're doing, we're going to start pushing these out for you guys. So yeah, just this is actually the first one we've done. So
Easy
thank you again,
POAP.
Django. This is yeah. So will we see you guys actually in here more often? Because we have our own treasury stuff that we manage here. I would love to obviously be a part of this and have you guys more involved, because it's what you guys do on a day to day. But this is also a big part of what we want to do. So
Yeah,
just having you
absolutely.
guys here and answering questions and just just bringing the inspiration too, because you guys are covering a lot of ground, and we would love to keep up to date on this. So glad to have you here. And again, it's always a pleasure talking with you. And I
Yeah.
look forward to just kind of carrying forward with this, guys. Appreciate it. So I registered for beatthebanks.com too. So I'll be up in there.
Yeah. Thanks everybody for coming. What really gets me going is spreading the knowledge about DeFi and the, decentralized, open, trustless, secure, disintermediated financial system that we're trying to build. And kind of, I know NFTs got a lot of folks into crypto, and there's a lot more ways to kind of better your situation and make money without just speculating and still keeping the price exposure, the directional exposure to these awesome assets like ETH that that we all love. But yeah, definitely I'll be in here. I'll definitely make it a point to be in here more. I've actually minted a monk and have been on since
Yeah.
mint, and I bought one more since then. So I've got 3. I actually bought one for my girlfriend as well. I got a nug for my
Excellent.
girlfriend. So I've technically got 4 in my wallet. I'm waiting for her to set up a hardware wallet and everything. Yeah, another thing, guys, use hardware wallets and take your security very seriously and everything like that. And yeah, so I'll be in here more. A lot of our investors are, or quite a few of our investors have monks, so I'll definitely try to get some
So
more brain juice around here in the yield
say
farming domain.
it would be fun to actually make a GMX position like in a video chat. Like if you just want to hop on at some point, I'll sit here and make one. If you just walk me through what your normal process is, that would be dope, dude. Something
Yeah,
like that
it's
would be
it's
really, really
super
cool.
easy for GMX. Like
I'm
you
sure it is,
don't even
yeah.
have to stake anything. Like you literally just go to the buy tab, you hit buy on Arbitrum, and you trade, ETH, stablecoins, wrap Bitcoin, whatever for GLP, and then you just hold that GLP in your
That's it. Just
in your
hold it.
wallet. Yeah, it's it.
Yep.
Super easy.
Sick. All right, man. Well, I appreciate it. Thank you very much. Hanging out.
Yeah. Thanks everybody.
All right, guys.
Everybody, have a good night. We will see you in the chats.
If you want to, I threw my Twitter in the chat as well. If you want to follow, show my social media. There you go.
Oh, of course.
Yeah, for
course.
sure. Of course. Where is it? Let me see here.
Monks VC chat.
Monks VC chat.
Yeah, and I'll be in here
There it
more.
is.
'Cause like I said, I've been in with you guys, and I've been here for on and off, especially like the first few weeks. But man, growing this thing and all, it's trying to keep up with this whole space. It's busy as hell. So
It's tough, dude. Yeah,
yeah,
I feel you. Don't
yeah,
worry. Don't worry. But I'm really glad you took time out today to talk about this stuff. Uh, yeah, and I definitely want to do some more work with you here. So I appreciate it,
cool,
dude. I'm hitting you up on Twitter right now too. So
awesome, awesome.
all right,
All
dude.
right,
I'll reach out to you in the private chat, and then let's see what we want to do moving forward.
all right, sounds good, man.
All right, take care, guys.
Thanks
Appreciate you
everybody.
guys. Everybody have a grand evening.
All right, adios.